morning. Thank you for joining the Retirement Recap for Friday, our Fiduciary Friday version, May 8th. Today with me is our Chief Investment Officer, Rob Milas, our Lead Consultant, Mark Salamone, and our Director of Education, Jennifer Sahadi. So Rob, first, you and I are going to chat because things don't make sense to me. You know, we're all still locked in our homes, and there's talk of about 20 million people potentially being unemployed. So not a lot of great news, but yet the market is, I don't want to call it great, but it's a heck of a lot better than I thought it'd be.
You know, it was eventful. Things, you know, it was a lot of ups and downs during the week, but at the end of the day, you know, we closed down 1% on the S&P 500. The small caps, the Russell 2000, were down 2%. So, you know, nothing earth-shattering there, but there really is this difference between what's going on in Main Street and what's going on Wall Street.
So is that because the Fed came out and basically said, you know, we're going to be the backstop, no matter what it takes, we'll make sure that it works? It has to be something. Is that it?
That's it. That's really it. So you look at, you know, here's Main Street, right? Consumer confidence plummeted to a 47-year low. Retail sales dropped by the most ever in March, right? Small business confidence dropped to a record low in April. 84% of small businesses are saying that they will pay less than half of their rent this particular month coming up. State budgets are racking up $100 billion in deficits. So that's Main Street, right? But on the other side of the fence, you've got the Fed. That's the biggest thing. And it's kind of in the eye of the beholder, right? The old adage is don't fight the Fed. Well, you know, times are a little bit different this time around. This isn't your, again, and we've talked about this a number of times, but this isn't your average, recession. This time is different. But you can see on the right-hand side of the page, you know, what's the bridge loans that the Fed is putting in. And, you know, the Fed's balance sheet is just really taken off. And they're really backstopping this economy right now.
And, you know, sort of related to what's going on in the stock market is what are participants doing in their retirement plan? So I have Jennifer here with me to talk about some information about what the average American has been doing with their account balance and their asset allocation.
Thank you, Rich. It's true. I think most Americans must have this hang in there kitty poster because most Americans have been unflinching in these unusual times, both in healthcare and in the market. We've seen less than 6% of people making changes to their investments. And that's according to a report by Morningstar. And of those 6%, it was mostly people who were self-managing. The people who were in target date funds and managed accounts showed the most tenacity.
That's honestly great news because sometimes if you make changes when things are volatile, it can really hurt you. On other news, we are really waiting for some clarity on the CARES Act and how distributions would be paid back into the plan. Mark, you have some information that just came out a few days ago.
Thanks, Rich. Yes, so when the CARES Act got passed at the end of March, early April, there was a lot of relief for a lot of people because now this meant they could get access to their retirement plan dollars. But what wasn't clear is, well, how do I pay this back? Or what are the tax consequences? And that started to get ironed out as we had the CARES Act unfold. But what we finally got just recently was a little more clarity. When it comes to the coronavirus-related withdrawals, you do have the ability to delay paying taxes on that. In fact, you can actually pay taxes over a 3-year period. So over 3 years, let's say, for example, you take a $9,000 distribution, you would claim $3,000 of income in the year 2020, 2021, and 2022. But if you want to pay that back over that 3-year period of time, you can avoid taxes altogether. If you were to pay it back all at the end of 2022, you would have to amend your tax return going back to 2020 to get the full refund so you wouldn't have that tax impact. So there's going to be a little bit of record keeping for those that take these withdrawals. And if they plan on paying it back, just keep that in mind. And of course, you know, if you work with a CPA, just make sure you're explaining that to them as you're going through this.
Keep your records and have a good CPA. Otherwise, it can be messy. So we'll end the session here today with, you know, this weekend is Mother's Day. So like most Mother's Days and other events that are going on right now, it'll probably feel different. But I'd like to say to all the moms at Alpha Pension Group, to my wife, and to all the moms out there, my grandmother, my mom, happy Mother's Day. And to everybody else, call your mother or Zoom. You know, have a great weekend, and we'll see you on Tuesday. Take care.